managed to come back in the green, but suffice to say that all the morning gains have been lost. And if you put it in context, this is a really big underperforming market if you compare it to the rest of the Asian screen, where every market is fairly in the green. For our market, we have seen from the high point quite a bit of slip. We have a guest now, Suhas Harinarayanan, Head of Research at JM Financial, now joins us from the sidelines of the JM conference that's going on. Suhas, hi, good morning. Good to have you on the show. First, a word on the overall market volatility and what have you made of that? At index level, it's not given any returns, it's given negative returns, but at stock levels, we have seen big gains in individual names.
You're talking this for the year or for the day?
For the year, both for the day actually, but for
okay.
for the year, okay. It's been more prominent.
No, I think, yeah, of course, yeah. So I think honestly, not very surprising on the index, and not very surprising on some of the individual stocks as well. I think there is absolutely been no earning support for the market. I think the beginning of the year we started with a double-digit mid-teens kind of, or even high teens kind of earnings expectations for FY16 and FY17. That has been cut down drastically to single digits for this year at least, and next year is still a lot riding on next year's multiples and earnings, but clearly there's been absolutely no earnings support for the market. The expectation that post the new government one would see a 75 to 100 basis points improvement in GDP growth every year and a result in earnings growth as a result of that hasn't translated. So honestly, from our perspective, we were right from the beginning warning or cautioning about the lack of earnings support for the market, and the way we had recommended to investors had been to stick to stocks which have the most or the highest earnings resilience, or actually will have strong earnings growth. So honestly, not very surprised by the negative returns. I mean, negative. I won't say we expected negative returns, but we didn't expect the market to end significantly higher versus last year's closing this year.
Okay. So Hans, talking about earnings season, how did you read the PSU Bank's performance this quarter? Barring a few of them, if you saw the gross NPL performance, at least on the P&L, a lot of them were stable.
Yeah, I think you're right. I think our analysts had upgraded the PSU Bank back in May 2015, actually the second quarter of this calendar year, on expectations of three events happening. First is a stabilization of the earnings, especially led by stabilization of the NPL portfolio of all these banks. Secondly, the management restructuring, management-related changes that we are likely to see in most of these banks. And lastly, any reforms associated with some of the large stressed sectors like power sector. We've seen all these three play through now, and from a stock performance, now so the buying the PSU pack as a tactical trade, that trade is probably over now. Now one will have to get more selective about the PSU banks by choosing those banks where these events are really going to result in a bigger re-rating from here. So we had recommended a tactical overweight in the PSU banks around the time that our analysts had upgraded. Subsequently, at the beginning of beginning of this month, actually, we had recommended trimming the trade, highlighting that most of these events have played out. The last expected event was the Discom revival as well. That's going to be a 3 to 5 year process, but from a trade perspective, we thought that's already done.
Okay, I'm just reading your report, and a few of the stocks that come to mind: Eicher Motors, Maruti. They've done well this year, Suhas. Maruti in particular has been the stock of the year from the index. Would you expect this kind of run to continue? Some of these leaders to remain leaders?
It's a good point. I think, when we or, I guess, real portfolio is constructed, you try to, create a minimum number of stocks based on certain restrictions, internal restrictions or fund restrictions. We don't run a fund, but, just a model portfolio, right? The thing is, our analysts actually, downgraded the stock to a hold earlier this month, but from a portfolio perspective, we think, the stock might still do well relative to some of the other stocks that, that trade in the market. So, which is why we still have it in the portfolio, which probably is giving you a hint that, maybe the expectations, that are getting into the market for next year is not for a, full-blown recovery and a full-blown, market recovery as well, but more moderate returns next year as well.
Suhas, we were just in conversation with the management of Titan, and he mentioned that the festive season has been better than what at least was anticipated. In that context, how would you approach consumption companies, say the likes of urban as well as rural?
And again, a very good question. I think on the rural side, clearly the stress is still quite high. We conduct these rural surveys every 6 months. We had conducted one, earlier this year. We just finished the second one for the year a few weeks back, and we had a report just last week where we feel that, or our finding was that both the farm, basically the fall in farm incomes has been quite substantial, and while the non-farm income, which make up about 2/3 of income, has also at best been stagnant. So the overall rural income is still down. This, combined with the deterioration in just land prices and hence the wealth effect, I think is going to impinge on rural consumption for some more time to come. On urban, clearly the story has been slightly different. The thing is, vis-a-vis expectations at the beginning of the year, they're all, down. Vis-a-vis expectations, maybe in September, they're probably better, right? So I think, it depends on which expectation and whose expectation you're talking about. But I think clearly urban has held up slightly better than, rural in our view. And I think clearly rural is going to take some more time to clearly pick up. And I think, there's no two ways on that.
So in that sense, what about say comparisons like Hero MotoCorp versus Bajaj or TVS? I think you've done some extensive survey on the two-wheeler sales growth as well. How would you be positioned on a space like this from here on, Suhas?
So we don't, apart from Eicher Motors, we have not recommended any other two-wheeler in our portfolio. In our model portfolio, so that clearly shows that we and Eicher is still largely an urban story with a rural optionality, as we call it, because they are expanding into rural India. There is a large unmet demand for Royal Enfield bikes in rural India, so we keep that in our model portfolio. We really don't have the other, we have not recommended the other names in our model portfolio, for various reasons. So I think partly, the structural, growth expectations in two-wheelers versus, certain company-specific factors.
Okay, so Suhas, final question from my end then, since we spoke about it, that it was not a surprise for you that the index didn't do much and a lot of stocks have done well. Do you think this will continue at least in the first half of next year? And by what time do you see the Nifty catching up, making a move towards its previous highs?
No, I think it's very difficult to talk about a certain number on the index per se, because I think the index is made up of various components and stocks which are driven by global factors, while individual companies might be just domestic companies. A lot of people ask us, why is the mid-cap index doing better than the large-cap index, because the mid-cap index probably is made up a lot more of Indian companies with India dedicated exposures versus the Nifty, which probably has a lot more of global indices. But putting these differences aside, I think it's honestly very difficult to take a call. We are focused on earnings. As we are talking right now, I think the earnings cuts have continued. There is nothing to suggest that at least on the rural consumption side, probably things are going to get better anytime soon. On the industrial side, things are sluggish, also because of global macro, etc. Because exports, which supported growth in 2013-14, that clearly that lever is certainly not there. So whether urban consumption alone and government spending alone will lead to kickstarting of earnings, it's probably difficult to I would say the probability is less than half that that will be the case.
Okay, all right. So Suhas, we leave it on that note. Thank you very much for joining in, and enjoy your